This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices regained a little ground on Thursday, buoyed by easing concerns over a potential supply glut as sanctions on Russian companies begin to bite. Having closed the previous session at two-week lows, Brent crude futures gained 35 cents, or 0.6%, to $63.87 a barrel by 11:20 GMT, while U.S. West Texas Intermediate futures rose 39 cents, or 0.7%, to $59.99. The latest sanctions on Russia's biggest oil companies 2 weeks ago are sparking some concerns about supply disruptions, despite rising output from OPEC and its allies, analysts said.
Saudi Arabia, the world's top oil exporter, has sharply reduced the prices of its crude for Asian buyers in December, responding to a well-supplied market as OPEC Plus producers ramp up production. State oil giant Saudi Aramco set its December official selling price at $1 per barrel above the Oman-Dubai average, marking the first price reduction since October after it kept rates unchanged in November. The December prices for other grades, Arab Medium and Arab Heavy, fell by $1.40 each to 5 cents and 10 cents a barrel, while that for Arab Extra Light dropped by $1.20 to $1.30 a barrel, the document said.
Moving on to the top news in the energy sector.
U.S. liquefied natural gas developers are on track this year to ink the second highest annual number of binding sales contracts, despite industry concerns about increasing capacity and rising costs. In the first 10 months of 2025, U.S. LNG producers signed sales and purchase agreements for 29.5 million metric tons of LNG per year, more than 4 times the 7 MTPA signed in all of 2024, data from consulting firm Rapidan Energy Group shows. The SPAs are used by project developers to raise financing by demonstrating that planned projects can generate positive cash flow with customers locked into contracts for as long as 20 years. The only time more binding agreements were signed by U.S. exporters was in 2022, when Russia invaded Ukraine, according to Rapidan Energy.
Poland is working on a deal to import liquefied natural gas from the U.S. to supply Ukraine and Slovakia, an agreement that would further tighten the European Union's ties to American energy, 2 sources familiar with the negotiations said. We are working with our partners, Americans, Slovaks, Ukrainians, on the possibilities of importing American gas to boost the energy security of our region, the Polish Energy Ministry told Reuters late on Wednesday, confirming the talks. Officials expect to announce a joint declaration to boost imports after a meeting of the parties at a transatlantic energy conference in Athens later this week, one of the sources said. Next, we have the top news in metal markets. Aluminium prices rose on Thursday, helped by prospects of improved demand and limited output growth in China, the world's largest producer. Benchmark aluminium on the London Metal Exchange was up 0.7% at $2,869 a metric ton by 11:09 GMT. The metal hit $2,920 on Monday for its highest since May 2022. Aluminium is sat around this year's highs as tight supplies and strong demand support prices, with China's market growing tighter, said Neil Welsh, head of metals at Britannia Global Markets.
Dalian iron ore futures prices snapped a 4-session losing streak to end higher on Thursday due to a fall in global shipments, although lingering concerns about oversupply curbed gains. The most traded January iron ore contract on China's Dalian Commodity Exchange traded 0.65% higher at 777 yuan and 50 fen, $109.15, a metric ton. The benchmark December iron ore on the Singapore Exchange rose 0.37% to $103.90 a ton, as of 0721 GMT.
We will now look at the top news in the agricultural sector.
Chicago soybean futures slid on Thursday, as muted Chinese demand for U.S. cargoes despite easing trade tensions between the two countries kept a lid on prices. Wheat fell on expectations of higher Russian supplies, while corn edged lower. Chinese buyers don't seem to be keen to buy US soybeans as Brazilian prices are more competitive, said one oilseed trader. The most active soybean contract on the Chicago Board of Trade fell 1% to $11.23 a bushel, as of 0249 GMT, having closed higher in the last session. Wheat gave up 0.7% to $5.50 minus 3/4 a bushel, and corn lost 0.5% to $4.33 a bushel.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.